Hello, guys. My name is Paul McMillan II. I'm a financial services specialist here in the state of Georgia and Florida. In this video, we're going to actually talk about how to build wealth with life insurance. A lot of people don't know that for a long time now, a lot of people have figured out to actually build wealth and create opportunities through life insurance products. We're going to talk about that. So let's get started. So, have you ever thought about life insurance as more than just something that pays your family when you pass away? Most people think about life insurance in one simple way. If I die, my family gets a death benefit. No ifs or buts about it. And that's absolutely one of the primary purposes of life insurance. But certain types of permanent life insurance can also have a cash value component that may play a role in a broader financial strategy. So here's an example. An IUL, which we call Index Universal Life Insurance Policy, is not a magic wealth building machine. And an IUL isn't appropriate for everyone, but when properly designed, properly funded, and properly managed, certain permanent life insurance policies can potentially provide both life insurance protection and cash value accumulation. So let's talk about how that can actually work, okay? So before we talk about building wealth, let's talk about the foundation. The first job of life insurance is protection. So imagine you have a family that depends on your income. You have a mortgage, you have car payments, you have educational expenses for your children and everyday bills. If something happens to you, your family could lose more than just a loved one. They could lose a significant source of income. That's where the death benefit comes in. Here's another example. Let's say someone purchases a $500,000 life insurance policy. If that person dies while the policy is in force and the policy terms are satisfied, the beneficiaries may receive the death benefit, generally income tax-free under current federal tax law. That money could potentially help with things like the mortgage, obligations, income replacement. It can pay down debt. It can also put funds away for the children's college, and including final expenses and other financial needs. So that's where protection comes first. Now let's take the next step. Some permanent life insurance policies are designed to build cash value. Unlike term insurance, which generally provides protection and some with living benefits for a specific period, it typically does not build cash value. Permanent life policies can remain in force for life as long as the policy requirements are met. An IUL is one type of permanent life insurance. So with an IUL, part of the premium goes towards the cost of the insurance and policy expenses, while other portion can contribute to the policy's cash value. The cash value can earn interest based on part of the performance of the external market index. So depending on the policy. Now, here's an important distinction. Your cash value isn't simply invested directly into the stock market. Let's make that clear. Instead, the insurance company uses a crediting strategy tied to an index. These policies commonly has a floor and a cap, although the exact mechanics vary by the policy. So let's talk about an example. A policy might has a 0% floor and a hypothetical 10% cap. If the index experiences a negative return during the crediting period, the credited interest could be 0% rather than a negative index return. But if the index gains 15% and the policy cap is 10%, the policy may be credited 10% subject to the policy's actual terms. What does that mean? You don't simply get whatever the stock market returns. You have to understand a specific crediting method, participation rate, and the cap, the floor, fees, and policy charges. So let's use a hypothetical example. Imagine Sarah, who's 35 years old. She has an income. She's building her retirement savings, and she wants life insurance protection for her family. Instead of looking at life insurance only as an expense, she explores a properly designed IUL with her financial professional. She contributes money to the policy over time. The policy provides a death benefit for her family, while the cash value has a potential to accumulate based on the policy's crediting strategy. So as the years go by, Sarah may have the opportunity to access some of that cash value through the policy's loans or withdrawals. subject to the policy terms. Now, that could potentially give her another source of funds later in life. But here's where people sometimes get the wrong idea. Cash value isn't free money. If you take money out of the policy, you can reduce the cash value and potentially reduce the death benefit. Policy loans generally accrue interest, and if a policy is not properly funded or managed, it can run into problems, including policy potentially lapsing. That's why the design and management of the policy matters, and that's why you have to be educated on that, okay? Now let's look at another example. Let's say John is 40 years old and wants to create multiple streams of retirement income. He has his employer retirement plan, he has savings, and he's considering permanent life insurance as another component of his overall financial strategy. Over time, if his policy develops sufficient cash value, he may be able to access that cash value during retirement through withdrawals and policy loans. The idea isn't necessarily to replace his 401k, his IRA, or his other retirement accounts. It's about potentially creating another financial bucket. And that's an important concept. Don't put all your financial eggs in one basket, as the old saying goes. Different financial tools serve different financial purposes. Your retirement plan may serve one purpose. Your emergency savings may serve another. Your life insurance provides protection, and a properly designed cash value policy that may potentially provide another source of exact accessible funds. Okay, but everything depends on the actual policy and how it's managed. That's why you have to be educated on how it works and how to use it. If you're considering using life insurance as part of your wealth building strategy, I want you to remember three things. So let's talk about number one. Protection comes first. Don't buy a permanent life insurance policy simply because someone tells you it can build cash value. Make sure the death benefit and the policy structure actually fits your protection needs first. Number two, understanding the policy mechanics. Know how premiums are allocated. Understand the cost of insurance. Understand the cap. Understand the floor. Understand the participation rates. Understand policy charges, and understand how loans and withdrawals work. And that's what a financial professional is going to help you walk you through. If you don't understand these things, ask questions before purchasing. And that's what a financial professional like myself will do. Number three, funding and management matter. An IUL is a long-term insurance contract. It's not something you should purchase casually and forget about. The policy needs to be designed appropriately and monitored over time. And illustrations are projections, not guarantees of future results. Actual policy performance can be different from what's illustrated. So, in conclusion, can life insurance help you build wealth? Certain permanent life insurance policies, including some IULs, can potentially play a role in broader wealth building or retirement strategy because they can combine life insurance protection with cash value accumulation. But it's important to understand what you're actually purchasing and how to manage it and how to use it. You're not simply buying an investment. It's not an investment. You're buying an insurance contract with cash value component. And whether an IUL makes sense for you depends on your goals, your financial situation, your health, your budget, and horizon, and the specific policy being considered. The right question isn't, how can I use life insurance to get rich? That's not the question. The better question is, how can life insurance fit into my overall financial strategy while still providing the protection my family will need if, God forbid, something happens to me? That's what the conversation that you should be having. So again, my name is Paul McMillan. I'm a financial services specialist in the state of Georgia and Florida. My goal is to actually help you to be financially educated so you can learn to make best informed decisions about protecting your family's legacy, how to build your financial future, how to create a plan that works for your individual situation. Thank you very much for watching this video, and I look forward to seeing you in the next one.